Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. Alright folks, here we are on Thursday, November 16th. We're going to take a look at Gap today. So Gap has earnings coming up. I thought we'd come in and take a look and see where it might hit support or resistance, whether it booms, busts, or moves sideways. So let's kick things off here in the Webull chart. If it does move sideways, I'd look for it to kind of pin itself or struggle with this 1409 level, whether it dips below and comes up to it or rises above and comes back down to it. That would be sort of what a relatively sideways reaction will look like to me. There are some additional levels in between these levels I have here, just so you know. I tried to keep it relatively clean, so I didn't put in 1,000 different levels. But for example, between 1409 and 1250, which is quite a big percentage change, there's a level right about here at about 1310. So, just be aware that there are some levels, but I try to put in what I felt like were the strongest levels historically from the price action on the chart. So again, 1409, if it moves sideways, if it does decide to boom, what I would look for is a couple of things. One, 1502, so basically 15 and then 16. It's not on purpose. That's just where the levels are. You can see them right over here and back here as well. Now there's this gap up here, no pun intended, 1725. So if it gets a real sustained rise out of the reaction to earnings, 1725, there's a gap that would fill at 2020. So this would be a huge percentage gain, right? There's a resistance level I threw in there at 1951 that is in the gap. But just so you know, there is that gap there if it does get some really, really strong motion upward. So basically on the dollar, 14, 15, 16, and then that gap kicks off at 17.25. So pretty easy to remember that, but just keep in mind there's levels in between, like I said. If it does drop, 12.51 would be the first, really strong level that I'd look for it to catch. If it gets that low, 11.53 and 10.63. So pretty close to just 12.50, 11.50, and 10.50 there to the downside. So those are the levels as I see it now. Before we flip over here to the Thinkorswim study, I do just want to mention it's been on a huge run since almost doubling the price since it was down here at 7. Right? So over the course of the 6 months or so. So it's been a while, but over the course of that time, it's about doubled in price. That said, it had fallen from higher than that. So pretty volatile moves, but just keep in mind that this could sort of work either way. It could work for you or against you. So even if there's a pretty good earnings call, some folks could say, you know what, a bunch of this good earnings call is already priced in. We already brought this stock from 7 all the way up to almost 14 or over 14 at points. And we feel that even though it's a good earnings call, stuff is priced in. We're going to kind of sell anyway. Maybe it's not a huge drop, but maybe it's just sort of like seems like an odd reaction. Just know that that can happen. The other way that it could work for you if you're a gap bull is, decent or neutral earnings call and the momentum that's been built over these last 6 months or so could continue to carry through. And those bulls could say, yeah, like this is our stock. Like we really like it. We're going to keep pushing it. And maybe on news that doesn't seem particularly tremendous or wonderful, maybe it could sort of still get a rise. So it's one of those things that you kind of have to wait and see, but to just sort of be able to be aware and plan for the idea that, sometimes a great earnings call, stock price can still drop and that priced in effect can happen. Same thing with neutral or expected earnings call. It could still rise. That could be the continuation or the momentum. Now, as it pertains to the channel, we have back here a brief trigger and a fire, but that sort of set off some of this erratic action. Nothing really crazy. It kind of, you could have picked up some good gains there or gain on the losses here, but it just kind of retraced itself. And then this was actually the sustained movement up. So kind of not a great call out there in the TTM squeeze indicator. We're in this huge bulk of bullish momentum in the moment and still trying to push up there. I have this like hiccup candle as it looked like maybe the momentum was dying down a bit. But here's how strong the bullish momentum is at the moment. It was down here at the lower bound of the channel, pressed the mid-range, pushed off of it, and then didn't need to come down to the lower bound of the channel. That's the first sign that, hey, maybe the bulls are coming in and stepping in to take this thing. And they did. They took it, took the mid-range of the channel, immediately started pushing out the upper bound of the channel. And then when it came down, it did not need to come test the mid-range of the channel. That is a sign that the bulls have a really strong grip on the stock, right? And that's exactly what happened. Pushed it right back out, came back in, and again, it just found support off of that upper mid-range of the channel. You see that gray line there that's pretty close to where this green wave cloud is, and pushed it out again. And then it came in a little lower this time into the wave cloud, so keep that in mind, but still not to the mid-range, and it wasn't able to thrust it back out of the channel yet again this time, and it's drawing back in at the moment. So a little bit of, increasing bullish grip here, and then a little bit of a relenting here, but it's relenting after a huge gain and heading into earnings, so sort of like an unknown catalyst, right? So kind of makes sense, but something to keep an eye on if those pushes upward continue to resist getting out of the channel when they did previously, and if those dips into the channel come closer and closer or press the mid-range of the channel. That's not necessarily a bad thing, but just know that that could mean that the bulls are at least taking a breather for the time being, as opposed to the strong push that they were giving it through here. So something I would continue to watch depending on how things play out. All right, folks, I hope that your trading week has been going well. And as always, I appreciate you watching, and I will see you in the next video.